So in today's video, I want to share with you 3 things you got to know when you're underwriting a deal. Whether you're a creative real estate investor or a conventional real estate investor, you got to know a lot of things, but these are the 3 things you got to know when you're underwriting a deal. Now, when we're talking about underwriting deals, we're not just looking at the overall performance of a specific property that we want to purchase, but we're also looking at the numbers, the metrics, the dollars, the data behind that particular property. And these are 3 things you just got to know. Number 1, and I've abbreviated them, you got to know the CMA. That means you have to know the comparable market value in that area of other homes. You got to know what that property is actually worth based on the comparables in that market. You can't just come up with a number. Number 2, the abbreviation is ARV and GR, the after repair value of that property, assuming you will fix it or flip it or resell it, or the gross rent, assuming that you will rent it or do some type of lease. You're going to need to know those numbers. And number 3, COA, is the cost of acquisition. How much is it actually going to cost for me to acquire or to acquire the property? So those are the 3 things you just got to know. Now, let me break them down a little bit. When it comes to residential real estate, you're going to have to do a CMA, or you're going to have a real estate agent that has access to the MLS system that agents use and appraisers use to have a better professional idea or perspective or a broker's opinion on what the value of this property is. You cannot just go off of the public real estate sites and think that, oh, they say it's worth $285 or they say it's worth $392. You have to do a proper CMA. A real estate agent, of course, appraisers will appraise a property professionally, but real estate agents that are competent, they know how to do a CMA. They're going to typically look at other homes that have been sold close to that home, probably within a mile or less, preferably in that neighborhood, and they're going to see what has sold in that area close to that home within the last 3 months. A lot of appraisers are not going to let you go back too far, all right? They're not going to go back a year because you looked at some comps and you see that, oh, wow, 3 houses sold for $400,000 18 months ago. It don't matter what has happened there just within the last 90 days, okay? There are some exceptions, there are some reconsiderations, but you don't want to guesstimate this kind of stuff when you're underwriting deals, especially when the cost of acquisition is serious. This is money you or somebody is going to be putting up, and there's a lot of risk involved. So you want to have a real clear understanding to know what that value is of that property. But they're going to look at the last 3 houses that have sold, let's say within the last 90 days. And they're going to compare those prices that of sold properties, not properties that are actively being listed, sold properties. They're going to compare it to this particular property. Now, what you want to keep in mind is when you're doing the CMA, what do you want? What are you trying to find out? Well, there are a few things I'm trying to find out. I'm trying to find out the ARV and the gross rent. In other words, I want to know what the as-is value of that property is, because a lot of times when you see the value of a property, you're assuming the value of this property is, let's say, $300,000, but is that the after repair value or the as-is value? Because there's a big difference. You could be selling a property and you're trying to sell it for $300, but you can only sell it for $300 when you have a new kitchen, you got new floors, the house has been, pressure washed, and a lot of things have changed. You might have had to put an extra 40 grand in the house just to sell it for $300. If you sold it as is, that same $300,000 house, less the 40 grand that you put in it to take it to $300, may only sell for $235. So you want to know what the as is value, and you definitely want to know what the after repair value is. And this is before you enter the deal. Always tell people, you want to look at the deal when you're underwriting it from entry to exit and reverse engineer it, meaning that I want to exit the deal. I want to know what my exit strategy is even before I enter it. I want to know that. And in order for me to know, I got to get the CMA. I have to know what the as-is value is, what the after repair value is, and what is the rent value. And it could be two different values. It could be like a house that's really dated, it ain't fixed up. There's a certain rent value for that, where if you fixed it up and repaired it and updated, it might be another value. So you want to get those dollars, and those could be two different sets of numbers for selling the property and for renting the property. So again, you can either be buying and holding it to rent or to do some type of lease option, and you could be fixing and flipping it to resell it. So you have to know that, because if I'm a fix and flip a property, that means I need to know what the after repair value is, right? If I'm going to buy and hold it to rent it or do some type of rent to own lease option strategy, I need to know what the after repair value is, but I also need to know what the rental value is once I get it up to a certain standard, all right? So that's going to be very important. And then you need to know the cost of acquisition, because when I count up the cost of what it's going to take for me to purchase this actual property, is it worth it? Based on the dollar amount that I'm putting in and the dollar amount that I'm getting out if I fix and flip it, or the dollar amount that I get if I buy and hold it. This is very, very important. That's why I said these are the three things you gotta know. There's so many other things you gotta know, but you definitely gotta know these three things. And once you get better at understanding this type of underwriting, it's easy for you to flesh through a lot of deals. People like myself who are investors, I have a team, but most of the times, before my team reaches out and makes propositions and set up appointments and all that, before they do all that, I need to filter these properties to make sure they make sense for me. And I've got to be able to do this type of calculation quickly, because I could be looking at 100 different properties. So I can't take like all day to do one property. I got to be able to look at a property and determine, okay, what is the value of it? If I sold it, what is the value of it? If I rented it, what are the costs of acquisition? And depending on if you're conventional or creative, your cost of acquisition is going to be different. Like, for example, if you're doing a conventional real estate investment deal, well, that means you might have a down payment. You might have, like an appraisal, an inspection. There are different costs associated to purchasing that property. Some repair costs. If you're doing a creative deal, you're probably not going to have the conventional down payment because you're not using lenders necessarily, but you might have costs to the seller. You may have costs to a wholesaler, a real estate agent. You may have holding costs, renovation costs. You may have arrears if it's a pre-foreclosure. So you need to know what the cost of acquisition is, because you have to put that against how much rent am I getting? How much cash flow am I getting from the rent if I rent it? Or how much money am I making if I repaired it, fixed it, and flipped it and sold it? How much am I netting? And I've got to put that against how much did it cost for me to get into it. So again, there are many other terms and concepts that you need to familiarize yourself with, but those are definitely three that you got to know. If you want more information, click the link in the description. We have an entire educational course on creative real estate investing, on conventional real estate investing. We have a mentorship where we mentor people to show them how to work their way through the ins and outs of underwriting and analyzing deals, structuring them, putting them together, finding them, generating leads from entry to exit. Just click the link in the description. Don't forget to like, share, leave a comment, and subscribe to my YouTube page. I'll see you in the next video. Peace.